Hey, what's up you guys? This is Junior Trader, and in this video we are taking a look at SPY and QQQ, that is S&P 500 and Nasdaq, and I'll also take you over other tech stocks, that is Microsoft, Apple, Google, Amazon, Meta, and Netflix. So, seems like there is some turbulence going on in the market, especially with the tech stocks. We are seeing tech stocks across the board all red, but let's go through the individual price action of those stocks and let's identify what type of trades or plays or what can we be expecting from these price movements. Now, we want to start off with SPY, but before that I also want to let you know none of this is any financial advice and it's only for education purposes. Please do your own thing. I'm just sharing here my opinion, nothing more than that. So SPY, today is a rough day, all right? That's given. We can see that today is the rough day. My day trading bot on SPY was still able to manage. Yes, I have to say manage because today was quite a rough day, but this is the data on the SPY with the bot. You can see we are profitable today as well. On the left hand side, you can see the last 30 trades, and we only had 4 red days on SPYs on our bot, on the day trading bot, and 26 green days out of last 30 trades. So I mean, I'm very happy. But yes, the market is getting a little bit challenging as we go the sideways. But anyways, the data is right in front of you. Again, guys, there will be red days as well. So just keep that in mind. And if you need access to my tools, links in the description below. Please remember these are only for education purposes. There is guarantee of nothing. As for the outcomes, I showed you the data. There are red days as well. Just keep that in mind. But anyways, you can use them however you like at your own risk and responsibility. All right. So coming back to the daily interval, so all in all, SPY, guys, is technically still bullish. Now the beauty with SPY is that first it was tech stocks leading it higher, then because S&P 500 also have other type of stocks in this, right? It's a spread across multiple industries, and now other industries are having that money inflow, and so SPY eventually has a lot of robustness in it. Market S&P 500 or SPY is still not bearish. Yes, we are still in a higher highs, higher lows situation, right? And I have been saying that for quite well. I have been saying that, guys, we are still bullish in all the pullback structure. Even in this pullback I talked about, guys, this is just a pullback. Structure is still bullish, and to this date, even today, yes, structure is still bullish. All right. So let's see if SPY continues above 564 or not, but I would highly suggest take partial profits in the extensions. Time to reload is into these pullbacks with the stop loss on the other side based on your risk tolerance. But yeah, and take partial profits in the extensions, and structure is technically still bullish on this thing. Going to the hourly interval, it's very simple. Still, we are intraday making our way higher, level by level, just continuing higher. Yeah, guys, there is just not a single structure break right now. Even intraday, I would say let it lose first 20 and 50, then some intraday downside may come, but otherwise no. I mean, pullbacks on this are just getting bought back up. Stay with the structure, but again, take partial profits in the extensions. Right. Anyways, structure on this is not bearish as long as we are above 555. Pullbacks wherever they form consolidations, double bottoms are just a buy because we are in an uptrend. There's just no bearishness on SPY. QQQ is a little bit of going in definitely the sideways, and then is this a distribution phase? Well, technically, as I have been saying, until this blue box, that is the top line of the blue box at $490, we are still in the bullish structure, right? This is still bullish, and if we have to form this a lower pivot, I don't know if you can notice, but there's a pivot forming here, a lower pivot, lower high. If this has to confirm, we have to lose the blue box with 20 days moving average. Otherwise, this is not sufficient enough on the overall structure of QQQ. QQQ will still remain bullish as long as we are above the blue box. If we lose this, then some structural weakness will start to come in. Then I can only say 476 because we have a 50 days moving average coming. These are big ships, guys. They just don't plummet like that. All right, QQQ will still has a lot of room to stay bullish even after going one leg lower, but then there's another chance that it can continue higher, and then we'll see if this rebound rejects into this blue box. But if it doesn't, provided if it breaks below blue box, otherwise no. Structure on this is still bullish. All right, and again, you can see into these structures wherever the double bottoms are forming, consolidations are forming, supports are forming, things like that. Just going to the hourly interval, and you can see we're still above 200 hours moving average as well, right? So yeah, it's just going through a pullback, right? All right, let's take a look at Microsoft. So as I said, if we lose that blue box, it's just a flush waiting to happen, and we are getting that flush on Microsoft. And I won't be surprised if we come to the 50 days moving average as the next level. If Microsoft wants to continue higher up from here, it has to regain 450 from where it is first, all right? Otherwise, no. This thing is just weak enough, and this is what I was saying, that guys, we lost the 200 hours moving average, constantly rejecting underneath that, and I said that this is the flush zone. We lose this blue box, it's gonna continue lower to the next level. We got to the next level, right? Trade with the levels. Yeah, Microsoft can, structure is to the downside on that. Apple is still strong. Yes, we are seeing some red candles on this, but it's now in no way, no form, fashion, it's bearish. It's not bearish. Previous pivot is very far behind. Bigger one is at 220, and then the other one is around this zone of 225. Yeah, this thing has a lot of room to still remain bullish through the pullbacks. 1 or 2 red days would not be doing on it anything. Google selling off, and looks like this is finally getting below 20 days moving average. Here's the thing, cool off as if it's coming. If it continues to happen, you can expect 50 days moving average. Accordingly, if we get above again this area 185 and 93 cents, that would be it. It can again continue higher. Google is not it can stick, right? That's the thing. But what we are also seeing on the hourly interval is once we lost this 200 hours moving average as well, you can see that downwards pressure is coming. So technically, it can remain downside as long as we don't get above this zone of 186 area. All right, 185 and 186 area. If any short position is taken, stop loss has to be on the other side. Just remember, Google is a sticky stock. You have to be very nimble with this. Be ready to pivot if the structure starts to hold or change accordingly, right? But I would only get much more negative on Google if we eventually starts to lose 50 days moving average. Otherwise, yeah, this cool off may continue, but 50 days moving average can give it another pop to the upside. We'll have to see the price action at those places, right? Amazon, this is the blue box. Once we start to lose this blue box, there's a structural break definitely. And yeah, it's trying to go up, but it's failing again. But it's trying its best at 20 days moving average and the structural area. Now, if you're not seeing any consolidation support here, and if we continue to break this lower, just because it's falling to this level doesn't mean it's time to buy. You have to see on the lower time frame if the structure is holding here, right? And if it doesn't, yeah, it's just going to crack lower. And to me right now, it seems like it's not holding, because on the hourly interval, you can see we are rejecting underneath of 200 hours moving average even today and from last couple of days. And this may result into some more weakness. If you lose blue box, you expect more weakness as well on this, and intraday it's already going weaker below 200 hours moving average, right? And accordingly, if the structure would change, we'll have a stop loss on the other side. Meta. So Meta, as I have been saying that, guys, let's go to the daily interval first. And with Meta, as I have been saying, we are weak, we are bearish, we will continue lower. And I mentioned about any rebounds back up to this 20 days moving average, or this lower end of the trend line is the candidate to be rejected, because structure broke once we lost this blue box with the trend line. And pretty much this was the top line of the structure loss for 523, and the blue box was the last line of defense. If bulls wants to turn it around, they failed. And then since thereafter, any rebounds that we are getting, you can see we are getting shorted and sold off. And Meta, yes, if we just, again, like right now, if Meta can't regain tomorrow 494, there is no sign of upside from there. We will just continue lower. So yeah, trend is to the downside. Structure will only start to shift again back to the upside if 494 and 93 cents we get above, and accordingly we'll have stop loss or other type of positions. But yeah, these were the areas to short, as I have been saying. And yeah, we are continuing lower. Structure on this has been on the downside since quite some time now, well, a couple of days at least, right? And yeah, that's what I've been saying. And then so 454, it's a possibility if we continue to sell off, and then that's where we can see if 200 days moving average will provide it some, with this 408 and 54 level, some more bounce or something. We'll see when the price action gets there. All right, Netflix, guys. So today a sell-off day, and as I have been saying, that structure change on this once we lost this blue box, and any rebound that would come maybe would likely be shorted, and it's getting shorted as well. That's the area to watch, right? That's what I provided. And if you have been taking here short, that's great. Stop loss has to be on the other side though, because structure will start to change on the other side of the blue box. But until then, yes, structure is still negative on this, and as we stay below the blue box, this can continue lower. The next definitely big leg would come if we lose 50 days moving average, but that would be that with this. This is the area that I want first it to lose as well. Also more like that will be the next leg then. So here's the thing. We are already in the one leg of sell-off. Let me actually do it this way. This is the one area leg of sell-off. That the next one would be below 50 days moving average all the way down to 634. I know these are tiny mini, but that's what during the structural changes through the transition, it's better to trade intraday. That's what I say. And then below 634 would be a little bit bigger one though, down to 596 and maybe 200 days moving average. But yeah, watch the price action at these levels around. All right, guys, well, that's it for this video. If you found it helpful, valuable, please hit the like, subscribe, and I'll see you in my next videos. Take care. Bye.